Hi, my name is Charles Markowitz. I'm a partner at Costmasters, an accountancy and tax firm based in Brussels, Belgium. Today, in this video, I will present you the main provisions of the Belgian personal income tax system. We will cover the four main categories of revenues, and then we'll see the tax deductible expenses. Finally, we will present when the tax will be paid after the tax return will be filed.
In a few moments, we will discover the four categories of revenues which are taxable in Belgium. However, before that, we need to be sure that you understand that all your revenues coming from anywhere in the world should be declared in Belgium. They won't be taxed at the full rate, but they will be considered for what we call the marginal rate reserve. It means that they will be added to your Belgian revenues, and the tax that you have paid in other countries will be deducted from the taxable amount in Belgium. Finally, in order to be fully sure that you don't pay too much tax, we recommend you to examine the double taxation treaties, agreements with the countries where your other revenues come from. Let's now consider the four main categories of taxable income in Belgium: the real estate revenues, the professional revenues, the capital gains, and the other revenues. The first category of taxable income are those who originate in your properties, houses or apartments, especially in Belgium, but eventually in other countries. You should know that there is no income tax on your personal home, even though a real estate amount could be paid based on the theoretical rental value. If you rent a new apartment or house to a physical person that doesn't use it for his profession, you will be taxed on what we call the cadastral revenue multiplied by 140. If you rent any real estate property to a person that will use it for his professional activity, then you will be basically taxed on the total revenues reduced by a coefficient of maximum 30%. Keep also in mind that the interest that you pay to a bank in order to keep some real estate revenues will be deducted from those revenues before taxation. The second category of revenues which are subject to personal income tax in Belgium are those that come from your professional activity as an employee, worker, director, self-employed, or retired from professional activity. To the amount that were declared by your employer, you should add the non-cash advantages. Let's think of the private use of a car, lodging, any heating in your home, the meals that a restaurant will offer you, a cell phone you can freely use, etc., etc. Of course, all your professional expenses can be deducted from the revenues before taxation. And also, you should know that anyone is subject to prepayment, either as a self-employee or director of a company, or when you are employee of a company, you will be subject to withholding tax. The third category of revenues are the capital gains, the dividends or the interests that you obtain from your revenues in Belgium or abroad when they were not submitted to the withholding tax in the other country. In principle, the withholding tax on capital gains will be 27% as of 2016. When you get some dividends which are paid by a bank, usually you will directly get the net amount. Then you don't need to report the revenues you obtain into your tax return. You should also know that there are some interesting exceptions to the 27% rate in Belgium. Let's think here to the author's right, if you get revenues from a book you wrote or from a video you sold, and also the corporate liquidation bonus, which is only 10% when you liquidate your company. Keep also in mind that there is no taxation on private capital gains that you obtain from selling your stocks if you own them for a certain time. This is probably why a number of French citizens come over to Belgium to maximize their financial gains. The fourth category of taxable income in Belgium are those that don't fall into the three other categories of revenues, and they are called the diverse revenues. They come occasionally and never from your professional activity. A perfect example of such revenues will be a commission that you gain because you put in touch two companies that want to thank you and grant you a fixed amount. Belgium tax law allows you to deduct a number of expenses before the tax rate will be applied to the taxable income. Such expenses include those that you spend in order to increase your professional revenues. Also, you can claim a family discount depending on your marital status and the number of children that stay at home. Finally, some specific expenses can be deducted. Let's think of a loan that you have for your home, the housekeeper expenses, and also some charities. Now that we have seen how to determine your taxable income after the deductible expenses, it's time to see how much tax you will have to pay. If your revenues are lower than 8,710 euros, you will be subject to 25% income tax. Then, the taxation rate will increase up to 50% if your gross revenues are over 37,870 euros in 2015. The last point in this introduction to the personal income tax system is the calendar, the schedule. First of all, the taxable income and the tax will be considered per calendar year from January to December. Your tax return will have to be filed by the end of June if you do it on your own, or by the end of October if an accountant professional will do it for you. The administration will have until the end of June of the following year to send you the tax bill, and then you will have another 2 months to pay your dues, or the administration will have the same term to pay you back the amount paid in excess.
Thank you for your attention. If you wish any additional information, a tax simulation, or the slides of this presentation, do not hesitate to contact us. Have a nice day.